Very good morning, everyone. So let's start with the set of revision. So this is page number 5.24 of a study material. It says, the first question says the compute the gross total income of Mr. F for assessment year 25-26 from the information given below. So we need to compute the GTI. Okay. Guys, what is GTI? You understand chapter 5 heads of income plus clubbing minus setup. This is called GTI. So generally we call it 5 heads, but actually after clubbing and after set off, we call this GTI. And after these, after that we will give chapter 6A deductions and then we get the total income. So I mean to say that clubbing and a set off you have to consider, then we get our GTI. Okay. So this question says, compute the GTI of this person for this assessment year. Income from house property. So house property is positive. Income from business before providing for depreciation. See, if we are having a PGBP income and we have not provided the current year depreciation, so current year depreciation should be provided first before the brought forward depreciation. Let's say any depreciation which belongs to last year's, unless and until we have set off the current year depreciation, because current year depreciation is current year expenses. So first of all, we have to see the current year expenses. So the order is very simple. Whenever you will be setting it off, first of all, whatever is the current year expenses, including current year expenses, including the current year depreciation. This should be the priority. Number one priority should be the current year expenses. Then number two priority should be the current year losses. And once these things are done, then in the chapter of set off, then you have to do the adjustment of brought forward losses. And thereafter, the brought forward unabsorbed depreciation. You can say that this is the fourth priority. So always, whenever, if in your question, see, set of questions are quite important from examination point of view and most easiest one. But the trickiest point is that the presentation. So how you should do the presentation here. So first, just think over it. When you will be getting the question, just give it 1 or 2 minutes and think over it, that what are your current year expenses, current year losses. You have to take care of them first. And thereafter, once these has been taken care of, then only you have to move to your brought forward, which are of earlier years. Brought forward means which are coming from earlier years. So brought forward losses and then the brought forward depreciation. Why? Because brought forward unabsorbed depreciation, you understand, it has an unlimited life. So we are okay with it if we can keep it at the last. But brought forward losses, if I talk about these two, brought forward losses have a limited life. Generally, it has a life of 8 years. Sometimes in case of speculative business, etc., it has a life of 4 years also. So among these two, brought forward losses should be given the first priority, and this is the second. But I am telling you again and again that these brought forward losses should be given the priority only when these things have been taken care of. So you cannot say, sir, let us adjust brought forward losses first and then current year losses. No. First of all, current year losses has to be given the priority, and before that, current year expenses. So when it is written over here, income from business before providing for depreciation. Before providing for depreciation means it's a current year depreciation. So current year depreciation or current year expenses should be given the first priority. See, here it is written also, na, current year depreciation. Current year depreciation is 26,000. So this 26,000, first of all, it has to be taken care of from 1,35,000 rupees. So actually it will become 135 minus 126. 109.
1,09,000.
1,09,000. Okay, now short-term capital gain on sale of unlisted shares. So it's a capital gain on sale of unlisted shares. It's short-term on shares. Is it 111A? No, it is not 111A. 111A is short-term on listed shares, right? On which STT is paid. So it is unlisted shares only. It is normal short-term. Long-term capital loss. Long-term capital loss from sale of property brought forward from assessment year 24-25. Assessment year 24-25 means previous year 23-24. This is the brought forward losses. So as of now, brought forward losses, please park them. As of now, just park them somewhere. Don't consider them till you are done with your first two things. So if anything is coming from earlier years, brought forward losses, just say them, just wait over here. We'll actually deal with you once we are done with these two. Income from tea business, 1,20,000. There is income from tea business. Under which head this would be taxable? Income from tea business. Although it's a business, so it will be taxable under PGBP. Correct. But you understand, tea, coffee, and rubber, this business are partially business income and partially agriculture income. And if you remember, in tea business, 60% and 40% is there. So 60% goes to which one? And I have told you, correct, that whatever is the higher percentage, it will be towards agriculture. So only 40% is my business income. So out of this, only 40% would be my business income. Then dividend from Indian companies carrying on agriculture operations, 80,000. What do you think, that this income is exempt or this income is taxable? What do you think? Dividend from Indian companies, what are your views, guys? Dividend from Indian companies carrying on agriculture operations. Is it taxable or it is exempt?
Taxable, because we are not doing agriculture. We are invested in that and getting dividend from it.
Correct. Because see, companies income would be exempt because they are doing agriculture. But we are not doing, correctly said Balak, we are not doing agriculture. We have invested our money over there in that business. Whatever that business is doing, that's okay. But we are not doing agriculture. So we have just invested our money there. We have just purchased the shares and we are getting dividend. So this dividend income is actually our IFOS income, taxable income. So for that company which is doing agriculture operations, for their income could be exempt. But when the company is distributing their profits to the shareholders, so shareholders are not doing agriculture. So that is an IFOS income. Good. Current year depreciation, we know we have to do. Brought forward business losses, loss incurred it 6 years ago. See, it's a brought forward losses. Again, we have to say that please wait. First of all, let us deal with the current year expenses, current year losses, then brought forward losses will come. But yes, it will come thereafter. But since it is incurred 6 years ago, still they are alive. If they would have incurred 8 years ago, 8 years have already passed, then we can't take it. But at least they have still some years, so we can take it, but we will see them at a second level, not at the first level, because we have to, we will say that please wait till the time we are adjusting our current year expenses, current year losses. So this is given to us. Now, the only thing which they have not mentioned to us is that which regime the assessee is following. And in fact, does not matter. Why in this question it does not matter? Because in set off, when you are doing set off, the only difference is in a house property losses. In house property, if there is a house property losses, then there is a difference in default regime and optional regime. But here, although we have house property income, but that is not a loss; it's a positive income. So for set off, we don't need to worry about that which regime this assessee is following. It would be same for both the types of assessee. So let us do this question, guys. This is answer number 1. Computation of gross total income. First, let us consider with the current year expenses and current year losses. So first we have house property income of 1,25,000. And in fact, what I will suggest you, that whenever you are doing your set of questions, so you should spare 1 or 2 minutes and you should do a rough working. A rough working at the back side of your answer sheet, which you can cut once you will be submitting to your examiner. So you should always do a rough working. So if I'll do a rough working over here, so that I'll get an idea that what I will be setting it off from which type of income. So here, let's say for example, we have a house property income. We have house property positive income. Then we have a business income, current year expenses, current year depreciation will be set off from that. So we have a PGBP positive income also, right? And we have a short-term capital gain also. Short-term capital gain, that is also positive. Then we have a long-term capital loss. See, this long-term capital loss is of earlier year. So let us keep it aside for the time being. Income from T business, then again we have a PGBP, one more income. Dividend income, we have IFOS income. As of now, we are not getting losses. Current year depreciation we have taken care of. Now the only thing which is left is the losses, that too. So in this year, we have current year expense of depreciation. We will take care it of. First of all, we don't have any current year losses. So we are done with these two parts. So we current year expenses or current year depreciation we have taken care of. Current year losses, we don't have it. So we have taken care of these. Now we will go to our brought forward losses. We don't have any unabsorbed depreciation over here. That's okay. So brought forward losses, we have two losses we have. One is long-term capital loss. What do you understand? With the long-term capital loss, it is of last year. It can be set off. So long-term capital loss, you understand, it cannot be set off from other type of heads. Only from long-term capital gain, it can be set off. So long-term capital loss, again, we can't set it off because we don't have any long-term capital gain over here. Everybody okay with this?
Yes, sir.
Yes, sir.
So this needs to be again carried forward. Brought forward business losses. Yes, we have a business income also. So brought forward business losses can be set off from PGBP. So now only because you understand, if you are carrying it from the last years, so last year will go in the same head only. So whenever the losses which are coming from last years, they cannot be set off from any other head. Let's say for example, last year PGBP, last year PGBP. Can I set it off from house property? No, right? Last year losses, whenever they will be coming in, they will be set off from the same heads itself. So only the PGBP can be set off. The losses of last year can be set off from this PGBP. So I now get an idea by spending a minute that house property income will become as it is. There will be a little adjustment in PGBP. Short-term capital gain will come as it is. IFOS will come as it is. So I got a rough idea that how my structure, the answer would be presented. So house property income is 1,25,000. Then we have PGBP income also. So income from business is 1,35,000 before depreciation. So I will set off the current year expenses, depreciation. Income from business. $1,35,000 minus depreciation of current year, 26,000. So this is 1,09,000. Then we have a T business also, and 40% of it would be taxable as PGBP, 60% is exempt. So 60% is agriculture. So 1,20,000 into 40%, 48,000. 157,000 is my PGBP. So I am keeping it in my inner column. Why? Because I will be setting off my brought forward business losses also from here. So we can leave 1 or 2 lines over here. Then we have a capital gains, which is short-term capital gain of 56,000 I will keep it in my outer column because now I know that I cannot set off my long-term capital loss from here. Long-term capital loss can be set off from long-term capital gain only. I always tell you that short-term capital gain is a younger brother, long-term is a elder brother. So long-term capital gain, elder brother will not take help from the younger. Correct? An elder brother has ego. He will not take help from this younger. Younger can take the help of the from the elder one. Okay. Then we have IFOS income, dividend income, 80,000 rupees. So we have done with these. Now the brought forward losses, long-term capital loss cannot be set off, but business loss, it is of last 6 years. So still it has time. It is not expired loss. So 45,000 is there, which I can set off from my PGBP. Less brought forward business loss. 45,000 will be set off from here. 1,12,000 will come here. Understood? So this would be my GTI.
Sir, 3,73,000.
3,73,000. Good. And I'll write a note. The note would be long-term capital loss of assessment year 24-25 to be carried forward. This is how I should actually present it. Correct, Sugandha. So they have ego. Long-term has ego. So they don't take help from others. They don't take help from the younger one also. Done? Okay. Question number 2. It says, Mr. Sohan submits the following details for his income for the assessment year 25-26. So he is giving us following details. And it is given to us, calculate gross total income and losses to be carried forward. So again, we need to compute the GTI and the losses to be carried forward, assuming that he has exercised the option of shifting out of the default tax regime provided in 115 BAC. So he has shifted out from the default tax regime. He is following optional regime. Again, we need to compute his GTI. Let us see what is given to us. So income from salary, 3 lakh. Loss from let out house property, 40,000. Okay. So it's a brought forward loss or a current year loss. It's a current year loss. Brought forward loss, they will actually tell you specifically that this relates to that year, that year, that year. But if they have not told you, so it means it's a current year losses. Okay. Now we are following, if we would have been following default regime, see in default regime, house property losses cannot be set off from other heads, right? But in optional regime, house property losses can be set off from other heads to the extent of 2 lakh rupees only. Right? In optional regime, we can set it off from other heads. So house property loss, there is a loss of 40,000. So up till 2 lakh, we are okay. So it is 40,000 only, so we are okay. So it can be set off from other heads. Even we can set it off from salary, yes. House property losses can be set off from other heads also, including salary. PGBP losses can be set off only, not from salary. It can be set off from others. The current year losses of PGB. See, if anything is coming from earlier years, it will go in the same head. But if the losses of current year, it can go take the help of other heads also, provided there are certain restrictions. So PGBP has a restriction only of the current year losses related to salary. We cannot set it off from salary. I've told you in the classes also that what is the reason actually behind it. but we are not going into detail now. So the PGBP losses can be set off from other heads except salary. But house property loss, there is no problem in optional regime. Now, income from sugar business. So sugar business, is it an agriculture business? No, sugar business is normal business, right? So it is our PGBP income. So we have salary also, house property losses also, PGBP also. Loss from iron ore business of previous year 1920 discontinued in the previous year 2021. So it is a loss of earlier years. Whether the business is discontinued does not matter. If the assessee is same, the assessee, even if he has closed down his business in the earlier years, does not matter. He can carry it forward. So these losses can be carried forward, but we will not see right now. It will come in the second level. So first level is always current year expenses, current year depreciation. The second level is brought forward losses and then the brought forward depreciation. So as of now, we will say it that please wait. Short-term capital loss 60,000, long-term capital gain 40,000. Whether short-term capital loss can be set off, short-term capital loss, current year losses. So current year losses we have to see right now. So whether short-term loss can be set off from long-term, yes, it's a younger brother. Younger brother can take help of elder brother. The answer is yes, it can be set off. Dividend is your IFOS income. Income received from lottery winning, that is again your casual income. Winning from card games, that is again your casual income. Agriculture income is not your income. So agriculture income is your exempt income, so you will not take it. If there would have been losses in the agriculture income, then also you should not take it. Exempt means exempt, whether it is positive, whether it is negative. So please, if somebody might get confused, sir, let's say it's a negative income, let me set it off from something. No, exempt means exempt, whether it is positive income, whether it is negative income. So whenever it is positive income, you don't consider it. The same way, if it is a negative income, don't consider this. So 20,000 rupees, whether it is positive, negative, it is an exempt income. Don't consider this. Short-term capital loss. But guys, please do remember, if they would have asked us to calculate the taxes, and if there is an agriculture income also, remember how there is a special treatment of calculating the taxes then if we have agriculture income also. So although agriculture income is not taxable, but if they would have asked us to compute the tax liability also, they have not asked us here. They have just asked us about the GTI. But if they would have asked us to calculate the taxes, then please remember, if we have agriculture income, how we do it? Agriculture income plus non-agriculture income, agriculture income plus basic exemption limit. Remember those steps? Now, short-term capital loss under section 111A. So it's a short-term capital loss again. Short-term capital loss can be set off from the long-term capital gain. Whether it is 111A, whether it is 112A, does not matter. It is just consider them as a short-term capital loss or gain, whatever it is. So short-term capital loss can be set off and it's a current year loss. Okay. Bank interest on fixed deposit. This is IFRS. Okay. So we have salary income also. We have house property income also. Now we have salary income positive. We have salary income positive. We have house property income negative. And salary income is 3 lakh. House property is 40,000. 40,000 can easily be set off. So ultimately we will not get house property. It will be set off from our salary income. Okay. Then we have a PGBP income also. And in PGBP, there is a lot of adjustment actually. Okay. Income from sugar business. This is PGBP. So this is PGBP. Loss from iron ore. This is brought forward PGBP. Short-term capital loss, long-term capital gain, no. Dividend, no. Income from lottery, no. Winning from card games. Agriculture income is not. Short-term capital. So only we have two PGBPs. PGBP we have 50,000 and then brought forward PGBP loss we have 120. So PGBP there is some adjustment. So we will see that PGBP there is some adjustment. Then we have a capital gains also. We have current year only. So this is capital gain current year. This is capital gain current year. Then dividend is not capital gain. Income received is not capital gain. Winning from lottery, agriculture, short-term capital loss. So we have capital gain of current year 3. And there is a loss, there is a gain, there is a loss. So capital gain also we have certain adjustment. Then whether we have IFOS also, Yes, we have IFOS. We have dividend income. We have IFOS here. Then income from lottery, we have IFOS. Winning from card games, we have IFOS. And bank interest, we have IFOS. And it is all positive. So we have IFOS income also. Correct? Let us see. Now we understood that there would be a salary income and where house property loss will be adjusted in the outer column. PGBP has certain adjustment, capital gain has certain adjustment, and IFOS also. It does not have that adjustment because we have actually positive income, all of them. So let us do the second question also. Computation of gross total income of Mr. Sohan, assessment year
The total
25.
income, sir. Total income, sir.
Bala, what are you saying?
So I think I said computation of total income. We should calculate total.
Hmm, okay, they have asked us to calculate the GTI.
Sorry, sir. Sorry.
Okay, no problem. This is the total income. Now we have salary income. Salary income we have is 3 lakh rupees less house property set of 40,000. So in outer column, we'll have 2,60,000 as salary. Then we have a PGBP income also. Income from sugar business 50,000. Sugar business we have 50,000 income. Then this is the PGBP and this is the PGB which is coming from last year. So can I just set it off right now? No. First of all, your this category should be over with respect to all the heads. So whatever is brought forward, although right now we are doing BGBP and there is a BGBP loss of the last year. So can I take these right now? No. First of all, you have to complete these two steps, 1 and 2, for with respect to all the heads. Then only you will bring your brought forward losses. So as of now, I will not bring my brought forward losses. I will leave some 3 or 4 lines over here. Then we have capital gains. So capital gains, we have 1, we have 2, we have 3. So short-term capital loss 60, long-term capital gain 40, and short-term capital loss 10. So first we'll write gain positive. Long-term capital loss gain 40 less current year. Short-term capital loss. So we have short-term capital loss 60,000 and 10,000. So whether it is from other short term or it is 111, it does not matter. It's a short term capital loss only, 70,000 rupees. So 70,000 I'll not be able to set off. Maximum we can set off only 40,000. And my capital gain will become 0. And out of 70, 30,000 needs to be brought forward. So I'll be writing it separately also in the notes, but right now still I'm just mentioning it. Rupees 30,000 short-term capital loss shall be carried forward. Understood? Now, done till here?
Yes, sir.
Yes, sir.
Okay. Now what I'll do, now we have IFOS income also, dividend, income from dividend positive, income received from lottery positive, winning from card games positive. If there would be a winning from card games, it would have been a negative income. So what you would have done? No treatment for the casual losses. So casual losses are dead losses. Can you set it off from, can I set off from this casual loss? Can I set it off from other casual income? No. Every time casual loss is a dead loss. You can't even set it off from any other head. You can't even set it off from other casual also. So casual loss is a dead loss. As of now, it's positive both. Then we have bank interest income also. So dividend, lottery, game show, card games, and FD. Dividend, lottery, card games, and then we have interest on FD. Dividend we have 5, 56, and 5. $66,000. Okay. Now we are done with the current year income, current year losses also. Now let us the brought forward losses. The brought forward losses only we have is coming from business income, 1,20,000. So it will be set off only from PGBP. It cannot be set off from any other because it is coming from last year's. And it is loss of 1920. So if we calculate from 1920 till here, so it's a loss of 1920. So previous year 2021 is the first year, right? It was loss of 1920. It is carried forward to next 8 years. So next year is 2021 is the first year. 21-22 is the second year. 22-23 is the third year. 23-24 is the fourth year. And 24-25 this year is our fifth year. So this loss is still alive. It's not dead loss. It's not 5 years has completed. No, this is the fifth. Has it been the eighth year also? We are okay with that. But if this would have been ninth year, then we would not have been okay with this. This is fifth year, so we are okay with it. 120 can be set off from PGBP. Let us see how much we have PGBP. Only 50,000 we have. So we cannot set off 120, but at least 50,000 we can set off. Yes. Brought forward business loss. Maximum 50,000 we can set off out of 120. So my PGBP will also become nil. So now I got my GTI. So 260 plus 66,000.
3,26,000.
3,26,000, right?
Yes, sir.
So this is my GTI. Now I also have to tell them a few points which I have not considered over here. Notes. First is agriculture income from India is exempt. Agriculture income is exempt. Second, I have to tell that loss from iron ore business out of 120, we are able to set it off some of the losses. The other losses will remain unabsorbed, and we have to carry it forward to 120. Brought forward losses iron ore business to be carried forward. How much it was? 120. 50,000 we have set off. So 70,000 will carry it forward. Third, short-term capital loss of rupees. So there was 70,000 rupees of loss. 40,000 has been set off. Short-term capital loss of rupees 30,000 to be carried forward. Just see if you have taken everything. Salary you have taken, house property, sugar business you have taken, iron ore business you have taken, short-term capital, long-term capital, dividend income, lottery, game show, agriculture income you have shown it, short-term capital loss, bank interest on FD you have taken. Everything you have taken, this is how you should show it. Done?
Yes, sir.
Okay.
Sir, I have a doubt in IFOs. Sir.
Yes, please.
You said we can't set up one cash flow loss from another cash flow income.
Yes.
But let's suppose we have two card games. One we have profit in card games. Another in the second game we have losses. In that case, we can set off in the card games
You are
losses.
saying that lottery 1, lottery 2.
Yes, sir.
Lottery 1 we have positive, lottery 1 we have negative.
Yes, sir.
No, still we can't set it up. Even it is same thing, doesn't matter. Casual losses from anything, casual losses cannot be set up from the, it is a dead loss. In fact, it cannot be set up from others. So let's say if it is not lottery card games, but it is lottery 1, lottery 2 also. So lottery 2 income, if it is negative, it is a dead loss. We cannot set it off from lottery 1 even. Was that your question, Bala?
Yes, sir.
Okay. No, not allowed. Okay.
Sir, but owning and maintaining race horses is not IFOs, it's a business income also.
Okay. Owning and maintaining that
Race
horse
horse.
race horses. Okay. So this is owning and maintaining that race horses is a kind of business activity. It is a kind of business activity, but we actually keep it in IFOS. So it is owning and maintaining means that you are having your own horses, or you have your own ground, and it is your horses, and you are doing that activity. It is not winning from horse race. Winning from horse race is casual income, but it is owning and maintaining. You are into this business activity. So although it is a business activity, but law says that we will keep it in IFOS. It is not casual. It is not casual. So it is a normal business activity, and any expense from these activities can be allowed also in IFOS. Second thing, if there is a loss in house, these owning and maintaining of race horses, if there is a loss in such kind of business activity, it can be carried forward to maximum 4 years. It is a kind of speculative, so 4 years. Second thing, if there is a loss in these activity of race horses, they can only and only be set up from race horses only. They cannot be set up from other income also. Any kind of other race also it cannot be set off. It can be set off only from race horses type of business activity only, although it is done, covered under IFRS.
Okay, sir.
Okay. Let me take one more question. Let me take some other questions. Do we have some big questions? These questions we have done in the class, so I don't want to take this. Okay. Let me take this 10th question. Mr. P, a resident individual furnishes the following particulars of his income and other details for the previous year 24-25. and compute the GTI of Mr. P and the amount of losses that can or cannot be carried forward. Okay. So we again need to compute the GTI and we have to tell that what are the amount which can be carried forward or which cannot be carried forward. So he has income from salary computed 18,000. Okay. Positive income from salary. Net annual value of the house property. So NAV is given to us 70,000. From NAV, we know that from NAV will be giving 30% standard deduction. And if there is any interest on borrowing, so if interest on borrowing is not there, then okay, but at least give 30% of standard deduction. So 70,000 minus 30%, 51,000. So it will become 49,000. So actually my house property income is 49,000. They have given NAV of the house property. Understood? This is how also they can give. So this is 49,000. Income from business is 80,000. So we have all positive income so far. Salary positive, house property positive, PGBP positive. Income from speculative business, this is also positive. So we have a speculative business income, that too positive. Long-term capital gain on sale of land, again positive income. Loss on maintenance of race horses. See, your question, Bhala. So loss on maintenance of race horses, so it's a loss. So this loss can only be set off from, it is not winning on or it's not casual loss, right? So we are actually maintaining the race horses. So for maintaining the race horses, it's a kind of business activity. Expenses are allowed, losses are also allowed, but losses can be set off from any other racehorse business only. So as of now, there is no racehorse business. So it would be carried forward for 4 years. Losses on gambling. So losses on gambling is a dead loss. So this is a dead loss. So we cannot carry it forward. So this will neither be set off from any other head. It will not even be carried forward. Got it? Okay. Now, depreciation allowable under the Income Tax Act comes to 8,000 for which no treatment is given above. So they have not given the treatment of the current year depreciation. So this is a current year depreciation of 8,000. So what we need to do is this 80,000, this PGBP income, we have to subtract 8,000 depreciation. So this 8,000 depreciation should be allowed from here because it is a first priority current year expenses. So this will become 72,000. So this 80,000 will become 72,000. Now, the other details of unabsorbed depreciation and brought forward losses pertaining to assessment year 23-24. So these are not two very old losses. Unabsorbed depreciation of earlier year. This is my fourth priority. So I will keep it at the end. And unabsorbed depreciation can be carried forward and set off from which head, guys? Can I set it off from capital gain also? Last year unabsorbed depreciation. Yes. Unabsorbed depreciation, this is an exception that whatever is coming from last year, it goes in same head. So if house property is coming from last year, it will go in house property only. It cannot be set up from other heads. If PGBP loss is coming from last year, it will go in PGBP income only. Unabsorbed depreciation or unabsorbed capital expenditure on scientific research, unabsorbed capital expenditure on family planning, you understand all three are brothers and sisters. So same treatment would be there. So unabsorbed depreciation of which is coming from last year, it can be set off from other heads also except salary. So this is an exception that last year depreciation can be set off from any head other than salary. But yes, we will give him last priority. Loss from speculative business is 16,000. So loss from speculative business, which is coming from last year, okay, 4 years are allowed. So it was last year only. So still it is alive. It is not expired. So it can be set off only from speculative business only. So we'll see that if we have a speculative business income, yes, 12,000 we have income now. So 16,000 out of 16,000, 12,000 we will be okay with it. But the remaining 4,000 which will remain, that will again be carried forward. Short-term capital loss 7,800. So do short-term capital loss coming from last year, it can be set off from capital gain. Long-term, short-term, both. Why? Because it is a younger brother. So do we have a capital gain over here? Yes, we have long-term capital gain. So can the short-term of last year can be set off from long-term capital gain? Yes, no problem.
Yes.
right? And compute the GTI. So quickly do this question as well. Let us do this question as well for the day. Computation of gross total income of so and so, assessment year 25-26. Salary positive, house property positive, PGBP. See, salary we have positive income, house property we have positive income. Then PGBP we have some losses which is coming from last year. So I will be adjusting this also. Some losses are coming from last year. Then this is PGBP, this is PGBP, this is capital gain. This is capital gain. Capital gain, something is coming from last year. It will also be adjusted. And then we have IFOS and loss from maintenance of horse races. This is IFOS. Loss from gambling, it is IFOS. And IFOS, it is actually this losses will cannot be set off. Loss from owning and maintaining racehorses, it will be carried forward. Losses on gambling, it's a dead loss. Okay. So salary we can easily put in the outer column. House property we can easily put in the outer column. PGBP and capital gain will be doing some adjustment in IFOS as well. So salary we can safely keep it in the outer column now. So once you are through with these steps now, these rough working, so it will make a presentation actually very effective also, and you will be able to complete it within in fact little early as well. So just try to make these things, try to give some 2 or 3 minutes on these calculations, on these adjustments, so that you should know that how you should proceed. Salary income is 18,000. House property was actually they have given 70,000 minus 30% standard deduction. It will become 49,000. Then we have a PGBP where we will be doing some adjustments also. So income from business is 80,000, and there is a current year depreciation also which we have to take. Income from business 80,000 minus depreciation 8,000 of the current year. So this is 72,000. I will not keep it in the outer column because you understand that we have certain adjustment here. Then income from business, income from speculative business is 12,000. I leave one or two lines over here. Income from speculative business 12,000, and I know that I have to set it off something, so I'll leave 1 or 2 lines after that as well. Then we have done till here. Fifth is long-term capital gain on sale of land. Long-term capital gain, we have 15,800. I will keep it in the inner column because we know that there is some losses of capital gain which is coming from last year. So I'll leave 1 or 2 lines. Then IFOS, loss on maintenance of race horses. Race horse owning and maintaining. So there is a loss of 9,000. I'll keep it in the inner column only. And loss from gambling, it's a dead loss, so not allowed. Just write not allowed. Dead, don't use this word dead loss. If you want to use it in the bracket, it's a dead loss. Or you can just say not allowed. So you have done till here. Current year depreciation you have done. Unabsorbed depreciation, we'll take it at the last. Loss from speculative business is 16,000. So loss from speculative business can be set off from the speculative business of the current year. So now last year losses. So loss of speculative business, loss of, this is brought forward loss of speculative business, 16,000, but maximum only 12,000 we can set it off here. So it will become 0. And 4,000 we'll write a note that 4,000 will be carried forward. Then we have a short-term capital loss of 7,800 minus short-term capital loss brought forward 7,800. So it would be 8,000 rupees. Will go in outer column. Then we are done with this and this also. Unabsorbed depreciation 9,000. So now unabsorbed depreciation, last thing which is left. So it will be set off from, first we will try to set it up from PGBP. Even if there is no PGBP, I would have set it from house property also. I would have set it from capital gain also, right? Because unabsorbed depreciation, which is coming from last year, except from salary, it is allowed from everything. But obviously, first we will give the priority to the PGBP first. So we have unabsorbed depreciation of 9,000 rupees less unabsorbed depreciation brought forward. 9,000 will set it off from here. So it will become 63,000. Correct? So now we are done with all the things. So this is my GTI.
So
138.
1,38,000.
Correct. So 138. So this is my GTI. And I will also write note. First, loss from gambling is not allowed, nor carry forward. Loss from gambling will not be carried forward. Brought forward speculative loss of rupees 4,000 to be carried forward. Third, so this loss we have set it off, this loss to be carried forward, this loss we have done. And there is a loss of maintenance of resource also 9,000 rupees. 9,000, we have not taken it outside because it cannot be set off from others. So this is the last one. Racehorse maintenance loss of rupees 9,000 to be carried forward. Everybody understood it? So these were the major adjustments in the set of chapter which we have done today. So tomorrow, from tomorrow for next 3 days, we'll be doing some total income questions. So we'll try to do 1 or 2 questions every day. So we'll be doing the total income questions from tomorrow onwards, guys. See you tomorrow at 7:30. Bye. Take care, guys.
Thank you, sir.
Bye-bye.
Sir,
Yes, please.